you everyone so much for joining us. Thank you, Bryan, of course, our guest from LayerZero Labs. We really appreciate your time and having you on today. So you are, of course, the founder of LayerZero. We have a lot to cover, and I have a ton of questions for you. First, a bit of brief background. So Bryan and I are actually in the same Telegram, small yield farming community. So we've known each other for a few months now, and it's been great to learn from Bryan and hear his experience. But Bryan, if you could start with just a brief intro on your background, who you are, how you got into the crypto space, etc.
Sure. Yeah. It's funny. I think on all the stuff we've done so far, we haven't really covered my background. So for many people, this might be the first time hearing it. My background's all over the place. Computer science major in university, dropped out after 3 years to play poker professionally. I did that for 8 years, traveled the world, did like 80 countries. I would say I was, one of the best heads up no limit players in the world for the game that I played during that time. Primarily sort of shallow heads up no limit. Left that to start a company with my two co-founders that we sold 2 years later. Ended up writing some machine learning models that got put in front of Billy Beane, so founder of Moneyball, GM of the Oakland A's. We sold those to some of the pro MLB teams. Started a company in the Valley with the first ever engineer out of Andreessen Horowitz, a couple guys out of Google, that just got acquired by People. Took a year to do independent research that was picked up and published by Noam Brown and Facebook AI Research, and then now I'm here. So have been in crypto since 2013, more or less full-time since the end of 2016.
Wow, it's fascinating. I feel like I meet a ton of people, ex-poker players or, current hobbyists still from the poker world. Why do you think there's so many people that come over from poker into crypto? Like that path clearly wasn't direct for you. So why do you think that is?
Yeah, I mean, I think what happened was in 2011, online poker got banned in the States. So Black Friday. And all of a sudden, everybody had nowhere to play. And anybody who stayed in the States couldn't play on any of the sites. And all of the payment processors, right? So the money bookers, now Neteller and Skrill, like all of these were shut down. And so what it meant was that it was just a very hard environment to move money around. And a lot of kind of the maybe sketchier sites at the time, but a lot of sites ended up making Bitcoin as a deposit option, which was super, super early there. Like Brian Mycon obviously was like a huge proponent of this back then. Yeah, I mean, it basically became the way that players deposited to these sites. So poker players didn't know what Bitcoin was, like they didn't care, but they would, I'm just going to shut off my speakers so Slack sounds don't pop up. But yeah, so they would, they would get some Bitcoin and send to the site. And then they would need to go to the other site. And so they'd have to withdraw in Bitcoin and then send it over. And like ultimately, while they weren't taking any immediate Bitcoin exposure, eventually they started aggregating in the same way they would keep money in their money bookers or Neteller or Skrill. They would just aggregate money in their Bitcoin wallet. And the number of average to mediocre poker players I know with kind of 8 or 9 figure net worth is just astounding. And a lot of the reason is that they were just extremely early. Like 2011, all of the poker community at least knew what Bitcoin was or was having early exposure to Bitcoin through like trying to get on these sites and play.
Yeah, no, that's interesting. I think that makes sense, but can you perhaps talk more a bit about the analytical mindset that you learned from your computer science background brought to poker? Because I think a lot of it is also that you can take this concept of plus EV, negative EV, and just having an analytical mindset to the way you approach crypto and life in general. Do you think that's also a contributing factor as well?
Yeah, I mean, I think there's a lot of poker players who are now running very successful funds. I think a lot of those skills directly transfer. I think the biggest thing, for me, I would say one of the biggest value adds is obviously the ability to think rationally about
Yeah.
any situation, but I think more than that, my mind, when you give me a system, the first thing that I think about is how to break it. I can't control it. That's just how my brain works. So when you talk about systems design and architecture and trying to round out sort of the edges in all of these crypto economic systems where security is just so paramount, I think it's helped me tremendously in that. That's just how my brain works. Any system that you give me, any game, it doesn't matter. I'm going to try to break it. And I just am constantly thinking through those sorts of things. And so for me personally, I'd say that is probably the largest value add as it's come to both evaluating systems and designing systems.
Awesome. So, yeah, I would love to just start now with how Layer Zero got started. I remember, I think you sent me the white paper maybe a month or two before kind of the initial PR came out, and I was fascinated to read that there. But it seemed like you kind of posted that and it was like a big mic drop. Like the all of crypto Twitter got engaged. Like it seemed like you guys came out of nowhere. So, like, how long had you been working on it before? When did you get started on the project? And then how did you, drum up so much excitement?
Yeah. So we got started, 10 months to a year ago. And really, we were just trying to build, like, we just wanted to build something. We had spent kind of 18 months just tinkering. We built everything from like on chain trading strategies for hedge funds to rebuilding like portions of Geth with custom node discovery to work on effectively just like speed and MEV stuff in terms of our ARB and triangle ARB. And so, we were just playing like just building systems around the space and just like, what does that look like? And ultimately we saw on wanting to build something that was across chains. And we were looking at all existing systems and there was just like no way that we would ever build on any of them for, millions of dollars, let alone like hundreds of millions or billions of dollars. And so we were just like pretty disillusioned with the state of things and kind of started working on just a bridging solution that like we thought was pretty interesting. And then ultimately realized like, oh, hey, the real core of this, the thing that like enables this is far more interesting. It's like a broad general problem. And like, this is what we should be spending our time on. And that became Layer Zero. And then in terms of the interest, to be honest, we had a pure luxury of like, we built 100% in stealth. We never actively fundraised ever. Both of our rounds were the very first conversation we had was somebody offering to buy out the entire round. So we had the luxury of just like being oversubscribed from day one. Always, we still don't have a pitch deck. We don't have like we have no materials that are like your traditional like I'm going out and trying to drum up interest. Right? We were building something we thought it was cool. We were excited about what we were building. We showed it to some people, just like talking about why we think it's cool and how they think about the space, and then they got really excited about it. And so, yeah, we never had like a formal raise. When we posted that on Twitter, the first post, like there's no, we have zero marketing people in our org. We have paid zero for promotion. We have zero PR firms, like none of that, right? We just like posted it. I mean, and it felt like, you just never know. You never know how those things are going to be received and whether it's been that first post. I think it was like, we had one post and like 34,000 followers on Twitter or something from one single post. But then the demo and like everything has been extremely well received. And for us, what that means more than anything is like that what we're saying and what we're building is like resonating with people, right? And I think that's one of the biggest things. So no, it was I'd like to say it was this grand orchestrated thing where we're really like amazing marketeers, but it's not at all.
Yeah. So you mentioned you were in crypto, since I think you said 2012 or 2013, was it? But were you like hibernating and not working on this until maybe DeFi summer, like piqued your interest again? Or when did you start working on the paper?
Yeah, so 2013 is when I started, and that was just like
Okay.
Bitcoin, broad exposure, and then like left for 2015 when just like nobody cared, right? It was just like total, the whole industry was dead, and like I was working on the AI stuff, and I was really fascinated by AI at the time. And then like 2016 came, and like Ethereum started picking up, and things were being built, and like the whole space got like really interesting again. And there was this whole like catalyzed effort of all the cool things you could build. You just saw this road towards like a lot of really awesome possibilities. And those years I was more involved in just exposure in the space, right? Just seeing how systems worked, buying things, that kind of thing. So we started working on this, like the early bridge stuff that we were doing about 12 months ago, and Layer Zero specifically about 10 months ago. So I think we wrote the paper we started writing the paper in April probably and had it done maybe by June-ish. And then we waited a little while to publish just because we were like going through wanting to like, when we published the paper, the core protocol was written. It was done. It was already submitted under audit. So like that, we didn't want, and luckily, because once that happened, inbound went up 1,000x, like the amount of things that I needed to do just changed dramatically. And so we had got to do all like the hard, gritty stuff early where we were like, that was our only focus. And so we didn't announce anything until the protocol was completely written and done. And even now It has been done. It's been audited 3 times. It's been, we could have launched it 10 weeks ago, and we're basically just waiting for Stargate to wrap up its audit and wrap up its second audit and co-launch the two of them together.
Oh, wow. Okay. That's interesting. So maybe we can take a step back and you could give a high level explanation, then we can dive deeper in what LayerZero really is. I think for a lot of folks, obviously they've, probably read your Medium article, perhaps read the paper, but it is a confusing topic. So like perhaps you could break it down for the audience.
Yep. So at its highest level, LayerZero is generic messaging. It's not more, it's not less. It's not a bridge, it's not a DEX, it's not a lending protocol. Like those are things that would be built on top of LayerZero. It's pure interop. So, when you're talking about integrating on this, there's nothing more. And again, like nobody believes that until I show them the docs. All you implement, send and receive. That's it. You're just sending generic bytes payload and interpreting those bytes payload that you receive. So like when you think about it, like TCP, it's not like sexy. Like nobody thinks about TCP anymore. Nobody like building apps like thinks about like the OSI model or like the web stack. Like, you'll learn that in like specific classes if you're taking it in university or like if you want to dive into a topic, but all of that gets abstracted away. And ultimately, like that's where we're going to live. Like we're an interoperability layer when our goal is just our highest level goal is connect every contract on every chain, period. Like that's it. And so, what this actually looks like in practice, if you go through our demo is, you have these DEX forks, right? We forked these DEX on testnet, UniV2 on Ethereum or on Ropsten, BSC and Avalanche testnets. And you're enacting like a swap, a bridge, and a swap all in one single transaction, all just when you have source gas, right? So you don't have source and destination gas both. But this can be any two arbitrary contracts, right? This can be where you're unstaking from a yield aggregator, bridging and staking. This can be casting votes from unified governance, where your governance may live on Ethereum, but you have this implementations everywhere, and the token lives everywhere. And like you can cast votes remotely. This can be a ton of stuff with state share and gaming and NFTs. At the end of the day, it is literally just like a small header in a packet. So if you can build it in Solidity or in Rust or whatever your native smart contract language is, you can do it across LayerZero.
Gotcha. So how does this differ? Like I think when we talk about interoperability, bridging, etc., probably most people, including myself, the first thing we think of is like we think of Hop, what they're building, Connext, what they're working on, Synapse. Like, how does LayerZero differ?
So most of the things like Synapse is a bridge, right? That's primarily what it is. So like I preface by saying like we're not a bridge, right? So Stargate is a bridge that we built that we think is very interesting, has a lot of interesting properties in that unified liquidity, 100% in native assets, and it has this concept of instant guaranteed finality, which makes it completely composable. But LayerZero itself is generic, like everything, most things prior were really focused on value transfer. And for us, value transfer is just a subset of generic messaging. There's a lot of cases where you don't actually need value transfer or you want generic messaging. So like an example might be a lending protocol, right? Where like right now, you'll collateralize ETH on Ethereum, you'll borrow, you'll bridge, you'll swap, you'll farm, you'll swap back, bridge back, repay, unlock your collateral, right? Like clearly the ideal flow for that is collateralize ETH on Ethereum, message goes out, confirming the collateral, like you borrow directly on that destination chain, repay there, message comes back, collateral's unlocked, right? Like that sort of information share, state share of applications. You want to run a cron where you have something, whether it's an index price or whatever, is some piece of information that's critical basically to your protocol, and you want to synchronize that between sort of all chains. Like you can run a cron very, very easily. Unified governance is another example where like you're not explicitly transferring values. This is not a bridge. It's not something. And NFT and gaming is constant, right? Where like you have a chain where you have high throughput and you want to do 1,000 actions over there and spend hundreds of hours, and then you want to resolve those back to another chain. Like Axie and Ronin is a perfect example of this, right? Where like right now a lot of things live on Ronin, but like economics may live back on Ethereum or back on some other chain. So there's tons of examples, and these are just a few of like where generic messaging is really important. And we think that that's really like that's the way you want to approach things. You don't want to approach things like let the bridge building on top be agnostic enough. Like we don't care if the bridge is mint and burn and lock and mint and burn and redeem. We don't care if it's in native assets. We don't care about any of that because all of that is built on the same layer of infrastructure, right? Like all of that just takes the same messaging. And that's kind of how we think about the world.
So yeah, basic example which you alluded to would be, let's say you have collateral on Aave on ETH mainnet, you want to borrow against it on, let's just say, Avalanche's C chain. We could use LayerZero theoretically to do that. Now, would you have to integrate with each partner, or can you build like a UI on top of these different apps and use LayerZero that way?
So LayerZero lives on each chain. It's just a library of each endpoint is a library of smart contracts that lives on chain that deals in validation and communication. So it deals in validating an incoming message that the proof is a valid proof from the other chain, and it deals in passing messages with that send and receive function. So anybody can integrate into that. But at the end of the day, if you want to use, let's say, Aave, or you want to connect two sushis, but you're not sushi, right? You want to connect two chains. You need to solve for the value transfer layer. And that's where the bridge comes in. That's actually the reason that we built Stargate is we could have launched LayerZero and we'd launched this really cool generic messaging protocol. And then it would be like 6 months until people can build something interesting, because integrations of a bunch of that stuff is like a pretty heavy lift where everybody needs to recreate this liquidity transfer layer, because like a yield aggregator, they clearly want to unstake from this farm on this chain and stake to this farm on that chain, right? But you need to move the thing you're unstaking over to there. And so like they need to make that bridging layer. A DEX, right? You might want to like swap and then swap on this chain and then swap on that chain. But again, you need to move that asset over. So everybody would need to recreate that layer. So Stargate's goal is to totally abstract that away. And that's the point of it being completely composable. So now what that means, so LayerZero itself, no. But with Stargate, what you can do is anybody can wrap any two contracts, compose Stargate, and have the pathway. So like if you, Justin, want to go make Uniswap on Ethereum to 1 inch on Polygon pathway, super easy. You want to tie 2 1 inches together. You want to tie all these farms on all these other chains as a yield aggregator and have it all live in one UI where you can do it. You want to make a DeFi hub that wraps it. You can wrap any two arbitrary contracts on any two chains and not need to deal with the liquidity transfer by just wrapping those two and composing Stargate. And that is sort of the power of integrations early on, is Stargate solves for all of this for early integrations and makes it that anybody can wrap any two arbitrary contracts and connect them. But obviously people are going to eventually build natively, and like that will happen, right? But this makes it where day one integrations, like it goes from an integration in a DEX, let's say Sushi, or Sushi's connected across all these 13 chains. It goes from the integration being like Sushi need to implement single-sided liquidity pools and like recreate all their pairs and have this thing that manages like the state of the XY equals K across this cross-chain pool, and like all of this to a literal pull request in their UI, right? So if you want to integrate with a DEX over Stargate, like Sushi on Chain A gets an ETH and spits out USDC. That's atomic. That's exactly how Sushi on Chain A works. USDC is taken and moved over Stargate. All messaging risk, all liquidity risk is at Stargate's liquidity in the middle. Sushi on Chain B gets in USDC, spits out asset X. That's atomic. Exactly how it works now. So integration for something like Sushi is a literal pull request in the UI. It's 0 changes of core protocol code, 0 risk to their existing LP. They don't need to incentivize any liquidity because all their liquidity pairs already exist across chains. It's just pull in the UI, have these contracts wrapped, and you're done. And like that's what we wanted from day one, is that people can hit the ground running and playing with the stuff immediately.
That sounds really cool. So are you building this UI yourself, or are you kind of leaving that up to the community?
So we have built Stargate, which is this bridge. But if anybody wants to, have this DeFi portal or wrap these other contracts or open up those pathways, we're leaving it to everybody else. So you'll compose the Stargate contract to allow that to be super seamless. But the goal is not for us to build anything. We built Stargate out of necessity, not because we want to like build all the pieces of the system, like clearly. But we have tons of teams right now building on testnet on top of it and playing around. So there are people sort of actively doing this already, which is great to see.
That's awesome. Yeah. And I see questions starting to come through in the comments. So please keep submitting them there. I'm watching that. And when I get through, the few questions I had prepared, I'll divert to those. Are there any partners you can announce now, Bryan, that perhaps we could get excited about, where we can start playing around with different chains with LayerZero?
There are none that there's a bunch I could announce that you guys would be excited about, but there's none that I can announce yet. So we're being very intentional about that. You will hear a lot more from us as we go to launch. But no, there's nothing we're going to announce just yet.
Awesome. I see a question here from Tuna from the audience. So we've heard about all of the progress you've made. Is there any public ETA that you can share? When can users start trying this, whether it's on testnet or mainnet?
Yep. Yeah. So there is nothing public on it, but as I said, LayerZero core protocol has been done. All 3 audits submitted for like almost 3 months now. Stargate is under its second audit now, and at the conclusion of these, there's like nothing else we're really waiting for, right? So very soon is the answer. But yeah, we have launched LayerZero months ago. So we will co-launch the 2 of them together, and that will happen very soon.
Gotcha. And which chains are you targeting for your initial launch as you kind of spool up here?
Yep. So goal is Ethereum, Binance Smart Chain, Avalanche, Arbitrum, possibly Optimism. I miss a Polygon. I think it's going to be those 6 at launch, and then we're already working on Solana, Cosmos, Terra. Solana plus Tendermint chains. And the goal is kind of very near future. We'll be adding Substrate, we'll be adding Algorand, like really going to everything. Yeah.
Gotcha. And then do you have a sense of gas efficiencies? Obviously, once we get off ETH mainnet, it's less of a concern. But presumably, a lot of people, their first interaction here is going to be taking assets out of ETH or Ethereum, and moving it to a different chain. Any insights there?
Yep. Yeah. So gas on source chain is roughly 140,000. Gas on destination chain, okay, it needs a little bit more on destination to you're validating the proof on the destination chain is about 180,000. So you're talking like a Uniswap V2 swap roughly. When you compare that to, there are a couple other constructs that are at I think 500,000 plus gas. It'll be very gas efficient relative to most other systems. But it really depends on what you're doing when you get there as well. So obviously, Ethereum is the chain where all of the cost is incurred. Going between 2 cheap chains will be extremely cheap in general. But yeah, it's about 140 to 180,000 gas.
Gotcha. And for a user, let's say I'm interacting between 2 chains, I want to use what you are building. What security assumptions am I taking on? Is this completely trustless? Am I depending on LayerZero for security or some other players? Could you expand on that?
Yeah, 100%. So the way I'll start by explaining the ecosystem now, right? So the main sort of ways that people solve this, you have 2 chains that are, get my hands here, 2 chains that are atomic in state, and you want to communicate. And the way that people do that right now, 98% of solutions is they just put their own chain in the middle, and you're going to write a transaction from the source chain, and then that middle chain is going to come to consensus as to the validity of the transaction, and then that middle chain is going to write the transaction out to destination. And that is the most important piece and caveat, because what it means is that chain that sits in the middle, that is the ultimate signer on the destination chain. It has complete signing authority, and if its consensus is ever corrupted for even a matter of a couple of blocks, it has the ability to just arbitrarily write messages to all destination chains. They're implicitly trusting it. And so what that means is that, again, even a small break in consensus has the ability to tap all liquidity. And this is what we saw with Poly Network and many of the other hacks, where in consensus itself is a really hard problem. Even some of the largest layer ones with tens of billions of dollars in valuation, billions of dollars applications built on top, suffer regular reorgs, where you're talking some chain that sits in the middle, fairly weak security, probably 10 to 30 validating nodes for most, $200-300 million bonded, is meant to secure tens or hundreds of billions of dollars. They're effectively growing to the largest honeypots that the world has ever seen. So that was a model we just fundamentally did not like. The other approach is Cosmos IBC style. You're going to take a complete light node on chain. You're going to take the block header from every single block, write it sequentially to the other chain, and vice versa. Once you have the complete block history of both chains, you can easily submit a transaction and validate this is a valid transaction. But it's very expensive to write on a blockchain. So to do this for one chain to Ethereum is current gas $80 to $100 million a day, maybe per chain. Per pairwise chain per day, right? So it's just not really practical in an EVM sense, which is why nobody's doing it. So we invented something novel we call an ultralight node. Effectively, the process of taking a single block in isolation, streaming it on demand, and validating it directly on chain. So Basically, to validate proof, you need two things. You need a block header, which contains a receipts root, and you need a transaction proof. So for EVM, that's Merkle Patricia proof. Combine those, and you can do the validation directly on chain. So we split this up by two parties. Both are completely open and permissionless. So that's something that's really misunderstood right now. We call one party an oracle, but an oracle is just any system that takes a block header and submits to the destination chain. Right now, we do work with the major oracles, Chainlink, Band, etc. And then a relayer is just any system that takes a transaction proof out of a full node and submits to the destination chain. So what this means is it reduces a couple of things. The worst case security of this configuration is equivalent to the best case security of the chosen oracle. So if you choose Chainlink as your oracle, the worst case is that your oracle and your relayer are the exact same entity. They're the same person. They're both being fulfilled by the same, and that's still as secure as the Chainlink DAwn. In every other case where say your oracle, the catastrophic has happened, the oracle has become malicious, they're colluding with relayer A to sort of run a side chain and perform attack on the destination application's liquidity. Well, only user applications accepting messages from exactly that oracle and that relayer are affected. So anybody using relayer B through Z, anybody running their own relayer, anybody who are using any of the other oracles, completely unaffected. So all of the risk in the system becomes heavily, heavily sharded. And what it also means, and this is the most important to us, we have no chain. We form no consensus. There's no round robin process. There's no Sybil. What it means is that each user application has complete control over everything. Like that's what we want, is them to have these security levers. So they specify the exact oracle they want. They specify the exact relayer they want, including the ability to relay their own transactions. And so if you're Aave and you're responsible for 10, 20, $30 billion in liquidity, well, you can run your own relayer. And now any malicious oracle, there's nothing that they can do to access that liquidity. There is no round robin process. There's no way for them to take over consensus. Unless you're actively, maliciously colluding with the oracle against yourself, you have absolute control over your security. And so what this means is it creates a backstop in the same way that even if a relayer is exploited and malicious, and a relayer implementation is completely in both is agnostic. So we've left it where an oracle can be implemented as like a 2 of 2 oracle system, a 2 of 3 oracle system. A relayer can be like a 1-inch style aggregator across multiple relayers. It can be a network of nodes. So any of your existing systems can fit into this, right? Like it is very likely, I would say, that most relayers will be implemented as some network of nodes. But what it means is that even if that is corrupted, it still needs direct collusion from the oracle. So if you're using Band as your oracle and your relayer is corrupted, well, it doesn't matter unless Band is actively colluding with the corrupted oracle to also exploit. So you have this backstop in both directions. But the important point is that every application has complete control over those exactly the oracle, exactly the relayer, and the number of block comps to wait. So what it means is that there is no, you're not offloading all of the security to one chain. You're not offloading to one like middle chain. You're not offloading all of the security to any other party. You have the ability to assign that wherever you want it to be.
Gotcha. Thanks. That was a lot. Hopefully members from the audience followed along. If there's follow-on questions, you can always put them in the comments and I will get to them to add clarity. One thing you brought up there, and I think you mentioned Polkadot briefly, and Daniel has a question here basically, but I think the question behind the question here is really like, is anyone doing anything similar? Like, do you push back on Polkadot labeling itself as a layer zero? Would you argue that you are the true layer zero? I mean, what are the distinctions there that we should be making?
Yeah, no. So I don't get super dogmatic about it. There are other communities who do. Like, Bankless says the community is the true layer zero. At the end of the day, like we're just building interop, right? Like that's what we're doing. I don't really care how you label us or how you label anybody else. Polkadot is trying to do, they're trying to do something similar, but they're doing in a model where everything routes through Polkadot, right? Like that's basically the model. So prior models were hub and spoke, where you're going to create this hub. Everybody's going to connect through you and everything will be routed through you. And what it means is that the security of all of these networks is being offloaded to the security of that hub. Like that's what that model reduces to, is it's only as secure as that hub. Is the reason that most of these hubs have not had sort of broad adoption yet. Some of it is because it hasn't been practical in sort of the approaches they've taken to connect everything. And some of it is in that people don't want to offload security of everything just to one sort of middle chain. And so, our model of actually direct endpoints on every chain. This process of being able to run the ultralight node, like that's something that we invented. That's something that has not been done before and is novel. So that itself is totally new compared to what anybody else is doing. But yeah, I'll just, there are different approaches, there are different trade-offs. We're very we think we think what we're doing is probably the right way to do this long term. We think this is a way that messaging will happen. But yeah, but that said, Polkadot, Cosmos, etc. Right? These are people who are trying to achieve something similar. And we're deploying an endpoint on Polkadot. We're deploying an endpoint on Cosmos. Like we're in no way are we like not want to facilitate that, because Cosmos and Polkadot both have really, really vibrant ecosystems where they have all these applications built on that want to communicate to the outside world. And basically, we can make that very easy for them to do.
Gotcha. And I'm curious, will you be open sourcing everything? I assume so.
Everything will be open source, 100%.
Okay. And I did want to follow up on that. So I think, I can't remember if it's Compound or Aave, but I believe one or probably both of those teams are working on this kind of like collateral bridging where you can have collateral on, say, ETH mainnet and borrow against it on, say, Polygon. Yep. Do you view that as competition? Or are you working with those teams or anything you can announce there?
No. I mean, we're working with those teams. So, I think like if you look at our cap table from last round, I think we have the largest or second largest stakeholder of like almost every major DeFi protocol. We're talking to almost all of these teams. Like we like thinking about the best way for people to do this, and like a lot of it is out of necessity, right? So like Aave V3 has introduced this Aave portal, and like some people have been making things because there was no suitable way to do it prior. So they're sort of, in the way I described, like all of these applications having to like house their own liquidity transfer layer. That's what's happening. There's a lot of applications so far have been like, well, nothing is suitable, so we need to like try to build this thing ourselves, but not everybody wants to. Certainly not everybody wants to do that, and most don't even have the bandwidth or necessarily like qualified to do that. So no, we think ultimately things will settle with one pathway, but we're well, I don't want to announce anything yet, but like yes, the portal, that sort of stuff like that, that's open to other parties. We certainly will be working with all of them. We do not view it as competitive at all.
Gotcha. And maybe, I don't know if you've released, I guess you haven't released any documentation, but I'm sure you've done a lot of thinking of what other applications there are for this technology. So like, obviously, like some of these DeFi actions come to mind, like lending somewhere and borrowing somewhere else. But is there anything else you've thought of that's novel that would really only be possible with what you're building?
Yeah, I mean, I think like yield aggregation is a very clear example where like what you ultimately care about is you have some pool of money and you want to put it in the most attractive farm. Like that's what yield aggregation is trying to do, right? And the ability to do that across all chains very easily, like that makes perfect sense. And again, we're speaking to tons of teams who are doing that. Like wallet integrations is another where there's like this huge fight for eyeballs right now where everybody wants to own all the eyeballs. And like in the same way that an application, a Uniswap or SushiSwap, like doesn't want their user to leave to go to some external bridge, to go to some other chain to hopefully end up back in their UI on the other side. They want the user to live there, click one transaction and do the swap they want to do. And now they have it, right? They want to own that. Wallets, all these others, like they want to own that, right? And we have a very easy way for them to be able to do that. So you, again, like hubs where the user wants to live in a wallet and wants to stake to get yield. They want to do all of these actions across DeFi, but they want to do it from one place that makes sense. Unified governance, again, is not something we thought about immediately. Huge interest in unified governance because, again, right now, governance across all these other chains, more or less worthless at the moment. You know what I mean? Like it lives in one place. And then in the same way with gaming and NFTs, like that was not a lens we were looking through at all. Unbelievable amount of interest from those parties who want to live everywhere, who want to have actions amalgamating everywhere, all of this. So I think there's a ton. I think in the same way that, like we care a lot about the applications and we think a lot about what the applications are, but the ultimate, like at the end of the day, we're just trying to solve for the most seamless communication. And then once we have that, like, I think we'll be surprised about what gets built on top. That's design space so much.
So when you say yield aggregation, I guess the most common protocol or project people would think of would probably be something like Urine. So a Urine strategist theoretically could deploy a USDC strategy that's now not limited to just what's on Ethereum mainnet. It could use what you're building to basically farm on, let's just say BSC, and deliver the yields back to the end user. What are your thoughts on what you all are doing around education? Obviously, we're very much in the weeds. I saw a comment here basically saying like if we want mass adoption, we need mass education. Most people obviously aren't watching this live stream. Most people aren't going to read the docs. Like, how are we going to educate users about like if we live in this world where all blockchains are meshed together about the risks associated with that?
Yeah, so I think there's a couple different ways that ends up, and I will say that while education is important early on, it's probably should be focused mostly towards developer education, because again, like you don't, as a user using whatever application you love in web 2, like you're not thinking about like the stack that it's built on top of, right? Like you don't know that the front end is written in React, you don't know how like way down to the networking level, like all that stuff is just abstracted away from you. At the end of the day, like the average user just wants to, they want to do something, right? They want to play a game, they want to get yield, they want to leverage kind of this neo banking where you have like this decentralized sort of be your own bank. There's all of these different things that people want to accomplish, and they don't necessarily care about how it's done. They're going to care if the security properties are weak and hacks happen and these things happen, right? So like ultimately the application cares very much, because that's a death of an application if they don't, right? So those things are hugely important, and it's important that the people building these things understand how it works, and there's like community standards for how some of this stuff is adopted over time. But the end user doesn't necessarily need to understand all that. It's too much for them to understand all of that. They want to live in a place and do an action. I think that's the biggest thing, is abstract all of that away from them. It will take time, but I think that's the end goal. But that said, for like what we're doing, huge amount of content and education to be rolling out, because we're early and like people need to understand this stuff. We've tried to make, if you've looked through our Medium articles, like look at our technical paper. A lot of people find that very hard to digest, but look at our Medium article and it's like full of memes, right? It's meant to be something that's more accessible. And I think we've done an all right job with that.
Yeah, no, I think I completely see your point about educating developers now. I will say though, like everyone that's using DeFi now is certainly at a point where like I think if you're in DeFi, you could get a grasp on how these things work at a high level, but most don't. I mean, I feel like I built my YouTube channel off just educating users on the risks and behind different projects and how you can utilize them, because I think a lot of people really aren't clicking behind the surface. So yeah, I think it's a challenge we're all going to face. I don't think it's exclusive to LayerZero by any means. Um, I see a great question from Edward. We actually spoke about this on our first call. This was kind of when ThorChain was more in the public spotlight. I think they still have a crazy valuation. I haven't been following it, or I shouldn't say crazy, but very high at like 5 billion or so. I'm curious if you could go over the differences as this person asks, and if you think, obviously we don't mean to be antagonistic here, but your perspective on if LayerZero and the technology you're building kind of makes these other technologies obsolete.
Yeah. So, fundamentally, ThorChain is trying to accomplish something different than what LayerZero is, right? ThorChain is a DEX at its core, right? So, ThorChain is trying to do native asset swaps across multiple chains, and it's had to build all this other stuff to do it in the same way that like IBC is a messaging standard that lives on top of a transport protocol currently, but like IBC is actually transport protocol agnostic, right? IBC could be built on any transport protocol. So the same way in like this sort of DEX, like could it be built on top of LayerZero? Like yes, a DEX is something that can be built on top. So ThorChain right now has a model that is you're doing native asset swaps. You have this pool of Rune, and all these assets are paired against Rune, and you're basically swapping into and out of Rune. That makes it sort of have this where you don't need to have each of these pairs, right? So this is like Bandcore V3 Omnipool is kind of a similar structure, like moving in that direction. But ThorChain itself has had to have its own chain. So ThorChain is like a middle chain. At the end of the day, like ThorChain is the person who's writing this transaction out to the destination chain. They have their own security models. They have their own security properties, but anybody using that basically reduces to this. Now, ThorChain is like complex in that they have a bunch of different products that are being built on top of like not just the DEX, but they also have like this Bifrost bridge, and they have like all of these other things that are doing. So there's probably like a little bit more nuance to dive into, and like how each of these things have their own sets of assumptions and their own thing that they're trying to accomplish. But the largest thing is the difference where the validation happens. The validation in ThorChain happens on ThorChain. The validation in LayerZero happens directly on the chain that it's going to. So if you're going to Avalanche, it happens on Avalanche. If you're going to Solana, it happens on Solana, and so on and so forth. Yeah, I would say that. And again, LayerZero is like generic messaging. ThorChain is a DEX. Like ThorChain's not trying to be generic messaging. We're not trying to be a DEX.
But to kind of dive into that a bit more, you would probably agree, right, that like it's easier to be a sushi swap, a Uniswap, and get a lot of demand for liquidity there through layer zero than it would be for something like ThorChain to bootstrap all of this demand as its own DEX, right? I mean, would you agree with that? And would you kind of say that like in 5 years from now, 10 years from now, in the medium to long term, that if layer zero succeeds, we'd probably be using these protocols that have already established themselves, have deep liquidity, and maybe that is ThorChain in the future. But do you really see a need for ThorChain um, with what you're building?
Yeah. So again, ThorChain the Dex, interesting. Like that is like what Bancor V3 is, and I think Bancor is a very interesting project. ThorChain, like the chain in the middle, dealing with validation, that may be something where they pivot away from over time.
Hmm.
It's whether or not that is needed. I'm not really sure. I think it has its own set of security assumptions. I will say that one of the requirements of Layer Zero is that it requires enough smart contract functionality to perform a validation of a proof directly on chain. So what that means implicitly is that we do not do like UTXO models, right? So Bitcoin, Monero, etc. And that is something that these chains do where they run their own nodes. Now we can do that by, there are ways that basically we can do that over time. But right now that's not something we do. So that is something kind of unique that those systems do now that we do not. But at the end of the day, it's just it's a small piece of the puzzle. DEX is really interesting. Native asset DEX, I think they were one of the first people really promoting native assets. That's something we think,
Yeah.
like, I think wrap synthetics do not make sense long term, like will not be the way that most things happen, especially when you're doing like multi-hop wrapping where you're like jumping around chains and you're like 6 wraps deep. But yeah.
Cool. Earlier in the call for people just joining in, you mentioned Stargate as kind of the first bridge you're building that takes advantage of the technology you've been working on. I'm sure a lot of people are speculating on Synapse, right? Synapse has a token out. Hop does not yet have a token, but my theory is everyone's going to have a token. Is kind of taken for granted now. Can you talk a little bit about the advantages? You said there's some interesting properties to what you've been working on. Can you briefly go over the advantages there?
Yeah. So there's like a couple things you want when you're making a bridge. I would say one of the things that you want is native assets. So right now, if you have 4 different bridges, you're going to land on that chain with 4 different wrapped assets. And so like a great example of this, like when you bridge USDC over Wormhole, let's say from like Solana to Ethereum, right? It's
Yeah.
like the process stuff you're going to go through. You'll sign like 8 transactions in Solana and you'll wait and you'll have to switch to ETH wallet and put in ETH and claim it on that side. But when you land, you get Wormhole USDC, right? You don't get the USDC that's natively issued on there. And there's like no liquidity pairs for that. And there's nothing to do with that. And if there's 4 different bridges doing that same pathway, like you're going to end with 4 different versions, all that have the same thing. So like wrapped assets work well when you're dealing with native assets, so Ethereum, Bitcoin, etc. Because like Bitcoin can't go and issue a contract over there that says, "Hey, we're going to allow you to mint Bitcoin on this chain," right? So what you do is you lock Bitcoin here and like you issue the wrapped asset over there. But when you're talking about things that are natively deployed, so your Aves, your Curves, your MIMS, as all of these applications are moving multi-chain, like you don't want to have the wrapped asset, because what it means is, one, yeah, you have all this fragmentation where each bridge is like giving you a different asset because a bridge has minting power over it. But also it means you're getting like a vanilla ERC20 on the other side. So if you have rebasing or rewards or like any of these things that are built into these tokens, all of that is stripped away. That doesn't exist on the chain. And you need to figure out which of these you're going to integrate into like lending protocols or liquidity pools or all of this. So it's very clear to see that like you want to get the real asset on the other side, right? Like you don't want to have S-Spell on one chain, and then when you land on the other side, you get like some wrapped S-Spell that like doesn't have the same properties as S-Spell over there, or any other thing like this, right? So native assets is really important. But one of the problems with native assets is there's 2 ways you can do it. You can have pairwise pools, which means it's really capital inefficient. So you might have like 2 like USDC from Ethereum to Solana, but you also need a pool from Ethereum to AVAX, and you also need a pool from Ethereum to Polygon and Ethereum to BSC, and so on and so forth, right? Where you have the same pathway of same assets across a ton. So you go from like needing maybe $100 million on Ethereum to needing like $1 billion because you need to support all of these pathways. So Stargate
And so
has
this
this
would,
property.
just to take a step back, this would be what Hop and Synapse are doing right now, basically, where they have these large incentivized pools I suppose Hop isn't incentivized yet, where they're attracting a lot of liquidity between their synthetic token and the native asset.
Yeah, and so they're pegging it out on the actual back end, right? So you're swapping in and swapping out, and kind of
Mm.
like the way that Rune is working. With the way that Stargates works, is effectively it's a pool of USDC on Ethereum and a pool of USDC on Solana, and you're going to add to this pool and subtract from that pool. But it's actual the asset that lives there that you want, and then has this property of unified liquidity, and that's really hard to do for most because. So you'll have one pool of USDC on Ethereum, and that will be tied to all chains. You won't have these pairwise pathways. So orders of magnitude greater capital efficiency. And the reason that's really hard with native assets is usually I send a request to chain B, and I go, and by the time I land, all of that liquidity is drained from chain B, and like there's no liquidity there. And like, what happens actually? Like, who rolls that transaction back? Who's paying the gas? Does a protocol pay it? Well, that's an easy attack on the protocol where like you drain the pool and just spam transactions, and they need to pay to roll them all back. Does the user need to like pay 2x gas up front to cover this sort of like revert case? There's all this messiness. And so the third property that we introduce is instant guaranteed finality, which means on the source chain, before that transaction resolves, you know with 100% certainty that it will resolve on the destination chain. So that allows it to be completely composable, where no application building ever needs to think about the fail case. They'll know before it resolves on source exactly the terms of everything, how much will be there, that it will be there. And so that allows Sushi, all these others, like if you're integrating this, you don't need to have this gap in the UI where like, you need to figure out what to do on that revert case or have the user get this other native asset and like figure out how to roll it back. All of that messiness just goes away. So the three properties of Stargate are unified liquidity, 100% in native assets, and instant guaranteed finality, which makes it like this completely composable bridge. And I think those individual properties are interesting, but composability is really the interesting piece because now, like I said, anybody can wrap any two arbitrary contracts, compose Stargate, and they're connected. It's done. Liquidity transfer layer is solved for that. And there's just endless possibilities with that.
Gotcha. So to clarify, you will still need a pool on various chains, let's just say with USDC, but it is the native USDC and there's no need for like a concentrated liquidity AMM to exist. Is that correct?
Yeah. So, and again, it's one pool. It's not pairwise pools, right? So yeah, you'll have one pool
Yeah.
of USDC on Ethereum that will be tied to all the other chains. That LP will collect fees from every pathway on every chain, not a pairwise pathway. And it's the real asset, not a wrapped asset, 100%.
Gotcha. So I guess let's talk about value capture then. I'm sure this is something you've all been thinking about. Where do you see LayerZero as capturing some of the value from all of this activity?
Yep. So, well, we haven't released any economic papers on either yet, which will certainly come soon. So I'll speak in like broad terms and hypothetical.
Sure.
But something like LayerZero, like clearly, the way that a protocol like that might capture value is there being like a messaging fee, some small fee that's taken on every message. And when you have something like Stargate built on top, like every message being sent on any application is fee that is driven to LayerZero, whether that's to the relayers, whether that is to what parties in the system and how those economics look like. You can think about maybe how you might design a system around that. But like the easiest way to think about building one of those systems is that the value capture is driven by the usage of the protocol.
Gotcha. I see one question here, like, and this is an interesting question because, like, at the end of the day, people want to decide what to speculate on. They're asking, like, will there be a farm? Will you be opening up these like USDC pools or whatever asset they are on for the community?
Yep. So again, no firm economics have been released. All of this is very hypothetical. But
Yep.
yeah, when I talk about like a pool of USDC on Ethereum and a pool of USDC on Solana, and you're like adding to one and subtracting to the other, that's certainly not a pool that like Stargate, the protocol, is going to manage, right? You can think about it like a DEX with single-sided liquidity, shared fees across all chains, and no IL, right? Because you're single-sided asset staking. You're not staking a pair. So yeah, somebody will provide that liquidity, and obviously it's built to be a decentralized system. It's going to be open and permissionless, like everything else sort of should be. And yeah.
Gotcha. You were a professional speculator, I guess one could say, in your poker career. If someone is aligned with like the vision that you've presented, believes in this world of this multi-chain world that's all interconnected, what do you think the best way to speculate that is on that today?
Yeah, I've had a couple people, even like really large funds, talk about like, okay, LayerZero releases, interop is now like more seamless, right? Where like existing layer ones can sort of play the role of some of the layer two roles. You can go easily between layer twos. You can go layer one to layer two to layer two, layer two to layer one. It doesn't matter. We're agnostic.
Yeah.
All you need to be able to do is validate that proof. So like, what does that look like, right? And for me, I guess the strongest belief that I have is that the more orthogonal the trade-off, the more likely it is to have longevity. So things that are shades of gray are likely going to be washed away over time as some of the scaling problems, other things happen, right? So things that are very small iterations of existing systems, I would say are unlikely to maybe stand the test, where things that are strong, or like there's always going to be demand for high throughput. There's always going to be demand for security. And those are all like oftentimes going to be just like strictly orthogonal. And so what it means is that these chains that have really strong trade-offs, like when you when you write an application in software, right? Like you don't say, I'm definitely going to write this in JavaScript, right? You're like, here's the thing I want to build. And like, you start with the front end, like maybe you're going to do that in React. And then like, you write something in Python, but maybe you need more speed and you'll go to C, or maybe you need your C++, or you need even more speed and like you'll parallelization and you'll write it in CUDA. And applications today, they're not built. It's not like a single server application where like everything is housed in one thing. Like oftentimes you're offloading pieces of the database, you're offloading. So like data storage, all of these things are different pieces. So if you have seamless communication between them, you can see how applications could leverage that basically more easily. And I think the chains that most effectively do that, or the systems that most effectively like allow applications to do that, will likely see a lot of usage.
Gotcha. Yeah, that's interesting. I see a question from Pock Angel. I hope this is I'm pronouncing their name properly, but they want me to ask you, which layer twos do you like the most? And I want to take that a step further and see, like, there's clearly a debate going on in the entire ecosystem of like, do we need chains like Solana? Like, do we need Avalanche? Do we need BSC when we could just theoretically have a ZK rollup or an optimistic rollup, depend on the security of Ethereum? And of course, there's still a role for you guys there. What are your views there? Do you see a purpose for these other chains, like these other EVM forks, essentially, or new developments like Solana?
I mean, I think part of it is, one of the things that you need to realize about the ecosystem is that this space moves extremely fast. Like we've had so many conversations where people are like, we know that this is the best solution. Like we think that this is going to be the winner, but we have to launch something now because like we're in this race against all these other protocols. And so like they build on the thing that's available now. And like that is something that's very real, right? That's first mover advantage. And that's like, it's just something where people are willing to take trade-offs, whether that's ease of building, whether that's security, whatever that might be, to be able to do something now. And I think it's the same way. Like, I don't have a firm opinion on like optimistic rollups are like definitely going to be the winner, or Zika rollups are definitely going to be the winner, right? I think the market is going to decide that. I think there is, all of this stuff, all like whether it's Ethereum scaling itself or any of this, it's all extremely interesting. I think it's all still being worked through. And I think at the end of the day, like I try just not to care that much. Like at the end of the day, we want to connect it all. Like I think whether it's these scaling solutions, whether it's something that somebody hasn't thought of or something that's to be invented, like it just, the market's going to win ultimately, because this stuff's going to become more efficient and we're going to have more scale. We're going to be able to on more users, more applications. So yeah, whether the whole world lives on Ethereum and Ethereum layer twos, or whether we actually have layer ones that, like, do you just leverage one set of security? Like I could see a world where that happens, where like, okay, of course, like all of the security goes here and everything else just becomes like a sort of like a branch off that security, or leveraging that primary security. But I could also see like, I could also see the need for certain trade-offs as well. So I don't have a firm belief, is what I'll say.
Gotcha. If there's any last minute questions from the audience, please submit them now. I just have a couple left. The next thing I want to ask, and forgive my ignorance on what Bitcoin has done with Taproot, although I understand it's a big development, could LayerZero theoretically now tap into Bitcoin? Because even people that are very dedicated to the ETH community understand that Bitcoin is theoretically more decentralized and more secure. So I'm curious if you've thought about that at all. I know we haven't talked about it yet.
Yep. So I actually have not dug into Taproot that much, because the majority of that has come around, or at least like been certain to be implemented since I've been working on this, and my head has just been like very singularly focused. I know that like Bitcoin interop can be done through sidechains, whether that's rootstock or there are other things that have been like trying to address this problem of smart contracts on top of Bitcoin and the ability to execute kind of more complex states of smart contracts. It seems like eventually, yes, there will be the functionality to do that over Bitcoin. There certainly are other ways of people trying to approach it. Right now, it's not our primary focus. As soon as there is a viable way, we will absolutely go there. As soon as humanly possible. Like Bitcoin brought me into the space. I was a very hardcore Bitcoin maxi for a while. It's just like fundamentally that is the allure that drew me here. Both in 2013 and in 2016. But then obviously the pace of building and the Ethereum community, has sucked me away, and here I am.
Yeah, I see a great question from the audience, which I'm sure you're going to be happy to answer because I'm sure you probably are. Are you hiring? And if so, what roles?
Yeah, absolutely hiring. I will say I tweeted about it the other day about being blown away at the amount of talent we've been able to attract. Our team is outrageous, and in terms of like the caliber of people, and I can't wait. I've announced some of it in the past in some of our channels, but there's so many unannounced hires who are like world class. Absolutely hiring. Primary roles, mostly some BD, I guess. Certainly engineers, definitely like integration engineers, QA, that sort of stuff. Core protocol is largely taken care of. We are looking for like an additional architect on the relayer side who's strong distributed systems background. Community, absolutely. Multiple roles within community. It's something we value tremendously, and we just have not had the right people in place to service as well as we'd like to. And then, we have nobody on content. So you'll see the posts, and, everything comes from Ryan and I basically right now. The team's about 13 at the moment. But everything outward facing is Ryan and I think to write one of those Medium articles probably takes us, like 5 minutes back and forth, where for somebody who's like good at writing and that kind of thing would be maybe like a couple of hours of work. So we're very inefficient when it comes to public content, and that's something we're aware of and certainly hiring for. So yeah, community content, BD, and always engineers.
Cool. And I assume this is all posted on your website. If you're watching this and it's not live, I will include a link in the description. If you're watching this live and you want to pull that up, what's the best place they can go to find these open roles?
Yeah, so we don't have a jobs board right now. We'll get one up soon. You can just email jobs@layerzerolabs.org or ping me directly anywhere, whether that's Twitter, Telegram, Discord. Find me and reach out. People do it all the time.
And I will say, I'm always love making these connections. I think a lot of people here know how to get in contact with me directly. I'm pretty available in our Discord community, and I can reach out to Bryan on your behalf and pass anything along. So definitely please do that if you're interested. So unless we have more questions from the audience, the last question I wanted to close with, I'm starting to ask more and more guests. There's obviously no right answer here, but do you believe we're in some sort of super cycle of adoption, or do you think we're still going to be on some type of cyclical schedule that's loosely pegged to Bitcoin?
Yeah, it's a really good question. I'd always kind of thought Bitcoin was the driver, and this sort of cyclical nature of Bitcoin was driving everything. This is the first time in 9 years where it really feels different. And at an adoption level, we've had huge companies, top 20 companies in the world, not crypto related at all, reaching out for us, exploring this stuff, exploring how to build that, how to work, how to touch it, right? It's just different this time, where before it was setting up the dream of this stuff can happen, this stuff can be built. Right now, there is really firm interest from all of the biggest groups in the world. And that's, whether that's the largest fintech companies you can possibly think of, whether that is, university endowments, all of these things, right? All of these groups, everybody is looking, how do we touch this? How do we handle this? How do we expose our current group of, whether it's LPs, whether it's actual merchants, whether it's users, anything. Everybody is looking at it, and that's just so different from anything else that I've seen prior. So in terms of price, like who knows? That I'm not a good trader. The market will crush me. So like I don't have a firm prediction there, but in terms of adoption, it's unlike anything we've ever seen before. That is hugely different now from either of the last two cycles.
Yeah. One thing I would add on to that, and again, I've kind of somewhat limited experience in this space. I've been in crypto for about 18 months, year and a half, so fairly new. But one thing I would say is like even over these last 18 months, I've seen a disconnect from price and like institutional interest. And you can see this in like announcements on with partnerships. I've seen it being on the inside of companies and advisors to companies. Is like there is that demand from institutions, and it's really like a true curiosity to learning about what's going on that I agree with you is pretty much independent of price now. Like I don't think it matters if ETH is $1,000, if BTC is 30,000 or 100,000. I think people are at the point where like there's now respect for the technology and understanding there to where like the price, we obviously care about that as speculators, but for institutions like it might be less of a concern, and they're trying to plan for the next 10, 20, 30 years. So
Yeah, I mean,
yeah, with that.
if you asked me 2 years ago how long it would be until we had S&P 500 companies holding these things on their balance sheets and like nation states
Yeah.
adopting it as legal tender, like, I would have said like a decade, right? Like it would have been so far out. The adoption from that space has been unbelievable.
Yeah, absolutely. Well, Bryan, it's been an absolute pleasure. Thank you so much for telling us more about your platform. If folks have more questions, we'll continue the conversation, or I will be in the Discord. You can ask me questions there. If you need to get in contact with Bryan about positions, feel free to reach out to Bryan or myself. Thank you, Bryan, so much. Really helpful. I learned a ton, and hopefully the audience did as well. All
Awesome,
right, bye,
Justin.
everybody.
Thank you so much for having me.
Thank you.